In the past few years, it's often surprised people to hear that one of the nation's top-performing apartment markets was one of the anchors of the Rust Belt, Pittsburgh, Pennsylvania. Is the Steel City continuing to surprise? Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Pittsburgh update. Pittsburgh benefited from some unique factors from 2010 to 2012 that made it one of the nation's hottest performing apartment markets. Number one, the Marcellus Shale. Natural gas exploration has been a huge boon to the local economy. And number two, eds and meds. Pittsburgh has done a great job reinventing its economy around healthcare and education, which just happen to be two sectors that performed well throughout the recession and the years afterward. So as a general formula, if you have energy, education, and healthcare as three main spokes in your economy, your apartment market's probably going to do pretty well. And that's certainly the case in Pittsburgh. We've seen a little bit of easing of late, but that seems to be inevitable coming off some record peaks, but still these numbers are very, very good. Let's start off with occupancy, coming in at a very tight 96.8% as of Q2 2013. Now you can see that it's down year over year, but it's down from an absurd peak of 98.6% 1 year ago, an impossible to maintain rate. And at 96.8, Pittsburgh placed 10th for occupancy among large markets. And here is occupancy by submarket, strong everywhere, and especially so in Oakland, Shadyside area, where much of that eds and meds employment is concentrated, 99.2% occupancy in that area. And let's shift to pricing. You can see rent growth, too, has cooled from peak levels. Rent growth had reached into the 6 to 7% range on an annual basis in parts of 2011 and early 2012. Slowed down later in 2012, and as of Q2 2013, same-store rents for new leases were up 3% year over year, right in line with the national average. But 3% here is different than 3% in pretty much any other market because you could see that rents here never fell in 2008 and 2009, as they did in pretty much every other market. So this market just continues to set new highs for average monthly rent. Compared to where they were at the end of 2007, same-store rents in Pittsburgh are up more than 15%, and that's one of the greatest jumps anywhere in the country over that time frame. And here is annual rent change by submarket. Surprising to see such little growth in Oakland Shadyside despite that very tight occupancy rate. Now, there's not a lot of institutional players in that area and not much of an appetite for pushing rents. On the flip side, hikes of around 4% in East Pittsburgh, Central Pittsburgh, and West Pittsburgh. And looking to the year ahead, our baseline scenario is to see a performance pretty similar to what we've seen in just this past year. It looks pretty evident that the peak growth period is behind us, but Pittsburgh should continue to do well. Look for occupancy to remain tight and for rents to continue to climb at a rate of about 3% year over year. And that wraps us up for Pittsburgh. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.